And in business news, the Federal Competition and Consumer Protection Commission, FCCPC, has announced Monday, January 5th, 2026, as the final deadline for all operators to fully comply with the Digital, Electronic, Online and Non-Traditional Consumer Lending Regulations 2025. The new regulations, which took effect on July 21st, 2025, under the Federal Competition and Consumer Protection Act of 2018, are designed to promote fairness, transparency and accountability in Nigeria's rapidly expanding digital lending industry. In a statement by the Commission's Director of Corporate Affairs, Mr. Onaje Ijagu, the FCCPC described this move as a major milestone in the federal government's ongoing efforts to curb unethical practices within the sector. The Commission's Executive Vice Chairman, Mr. Tunji Bello, emphasized the need for strict adherence to the compliance deadline, noting that full compliance is not only a legal obligation, but also a critical step towards protecting consumers and ensuring sustainable growth in the digital lending space. FCCPC reaffirmed its commitment to fostering responsible digital lending practices that safeguard consumer rights and strengthen public trust in Nigeria's financial technology. Nigerian Maritime Administration and Safety Agency, in collaboration with the Nigerian Ports Authority and the Nigerian Shippers Council, has restated its commitment to better working conditions for dock workers across the country. This was at the 2025 Day of Dock Workers celebration, which held in Lagos. TVC News senior business correspondent Ifunanya Eze reports.
It was a gathering that brought together key players in Nigeria's maritime industry, united by a common goal to make port operations safer and more rewarding for the nation's dock workers. In his keynote address, the Minister of Marine and Blue Economy, Adegboyega Oyetola, represented by NIMASA's Director General, Dayo Moberiola, lauded the vital role of dock workers, describing them as the first link in the nation's trade and logistics chain that drives the blue economy.
Except ports, guarantees every ship coming at Nigerian shores does. Every ship coming at Nigerian ports will be confident and comfortable to operate within the Nigerian clients.
The President General of the Maritime Workers Union of Nigeria, Francis Bunu, expressed appreciation to the minister and agencies under the Marine and Blue Economy Ministry, especially NIMASA, for ongoing efforts to enhance the welfare of dock workers.
We are talking about safety of workers. While they are working, let them be what? Safety culture. Let the industry players, you put all safety apparatus in place for them to work safely while they are working in their workplace.
I can say level of accidents have reduced, but safety still needs to be more improved from all the terminal operators, not only the government, Nigeria Port Authority or
Also speaking, the Minister of Labour and Employment, represented at the event, urged stakeholders to uphold international labour standards by ensuring fair pay, safe working conditions, and continuous training for dock workers.
The addition of occupational safety and health as a fundamental principle and right at work highlights the importance of preventing dock worker accidents through strict adherence to safety standards.
The Day of the Dock Worker serves as a reminder of the crucial, yet often risky work these men and women do, and the need for continued collaboration to make Nigerian ports safer and more efficient. Ifunanya Eze, TVC News, Lagos.
Chief economists at SPM Professionals has linked Nigeria's persistent economic instability and exchange rate volatility to the widespread use of foreign currencies, particularly United States dollars, during elections. Speaking at the presentation during Primetime Academy and Central Bank of Nigeria's joint training for journalists in Abuja, the economists explained that the dollarization of election spending and campaign financing has become a recurring trigger for post-election economic downturns.
Pre-election year, most of the time, not all the time, have the highest economic growth. Immediately after the pre-election year, you start seeing economic nosediving. If you now become quote and unquote lucky or unlucky, I don't know how you see it, if there is global shocks, it makes Nigeria impacts to be more sporadic if there is a shock. So, but what is causing all of this? We've already depleted our reserve in an election year. Politicians have made withdrawals, they've sold those into the BDC, and that has created instability. It has enhanced inconsistency and also instability in exchanges. They are leaders of our nation, they are opposition in our nation, they are politicians across, this is not one political, across all political parties. I think National Assembly and INEC should see and have a rule to say, if you must spend anything, whether what INEC approve or beyond what INEC approve, that's their own. It must be in Naira, and EFCC must be empowered to follow up anybody that spend on election outside the Naira. Then you see that for the first time in a long time, after the election, we will have relatively stable economy.
Well, the stock market maintains its positive trading, which began on Wednesday as investors renewed their interest in stock picks. The market index of traded securities hit 1.08% to stress new price levels in many sectors. Custodian insurance closed deals with 10%. Linkage assurance also recorded a 10% price improvement. Other gainers included Oando, NACO, and Legend Internet. The price losers were Austin Lars, Union Darkon, Sterling Bank, NGX Exchange. Gold paused for breath today at the end of the longest government shutdown on record, with markets turning to resumption of United States economic data to gauge the rates outlook. U.S. stock futures rumbled for slightly negative to 0.2% firmer through the Asian session. Small gains for FTSE and European futures suggested further record highs could be in store for cash indexes. Japan's Nikkei was up 0.3%. The broad topics rose further to set an all-time high. Investors shifted portfolio from artificial intelligence firms to buy exposure to other parts of the economy. In the Hussein market, volumes were little changed, but there was a bid for lithium and gold miners as lower interest rates tend to drive buyers for gold. Hong Kong Hang Seng retreated slightly from 1 month's high, and the Shanghai Composite rose 1% ahead of credit and retail sales data due later in the week. On Wall Street, Dow Jones Index notched the record high overnight, with the tech-heavy Nasdaq retreated. In London, mining heavy, FTSE 100 closed at an all-time high. Bank stocks pushed the pan-European stock record to record peaks, while Italy's FTSE MIB has hit its highest in almost a quarter of a century. Finally, crude oil prices head downwards today, extending losses from the previous session, as a report showing rising crude inventories in the United States reinforced concerns that the global market is more than sufficient to meet current fuel demand. U.S. West Texas Intermediate crude fell to $58.32 with a decline of 0.29%. Brent sells for $62.55 with a downward price review 0.26%. Bonnie Light sells for $78.62, also with a decline of 2.84%. And for the OPEC basket, dealers offer $65.04 with a downward margin of 0.20%.